We have now the first panel discussion. Daria Krasnova, managing editor at BeinCrypto. Daria? Hello? Okay, it's going to be in English. So, oh, you should sit there. It's perfect place for you. And
One test.
yes? Okay, we can have all our speakers. Doge Di Luca. Yes? How you pronounce your name?
Dougie.
Great, great. Yeah, welcome, welcome. Yeah. Annie Grease. He's from the co-founder and the chief legal officer at the Kion Protocol.
Let's just invite all the panelists to the stage.
Guys, you all should come over here. So and your names are so difficult. Yes, lovely. Hello. Hello.
Where's
and
Mete?
Mete Başkaya, blockchain crypto lecturer. And here we go, another one.
So, okay. Thank you. So, hi everyone. I'm glad to see you here. I'm Daria Krasnova, managing editor of BeinCrypto, one of the largest media outlets in the world, covering all things Web3. Here I have 1, 2, 3, 4, 5 amazing speakers who are very ready to discuss the development of DeFi landscape. So, first of all, we failed a little with the names, so let them introduce themselves.
Check. All right, there we go. Hi, I'm Dougie DeLuca. I'm an investor at Figment Capital, and I've been in DeFi for quite a long time, so excited to speak today.
Hello, I'm Grace. I've been in DeFi for the past, let's say, 3.5 years at least, but as a lawyer, and I shifted to the dark side by now co-founding a DeFi protocol.
Hey, Seraphim from Athena. I did a bunch of stuff before, lending protocols, liquid staking derivatives, all that stuff pretty much. And now we're doing a delta neutral stablecoin with institutional custody.
All right, hi guys. Pretty excited to be here. I'm Luca, also known as Moss. A pretty long background in technology and traditional finance. And then 3 years ago, I joined Avantgarde, who were the core developers of Enzyme, which is a protocol for on-chain asset management. So excited to talk about DeFi.
Dear all, hi. Welcome to this conference. I'm Mete Başkaya. It has been 10 years that I am into blockchain and crypto. I've been lecturer and academician in blockchain area, and also I've got a professional degree with the 20 successful projects. And now I am into project of the consultancy right now, and also giving lectures in the university and the projects. Very pleased to meet you, by the way.
Okay, cool, thank you. So, as we all know, last couple of years were like really brutal for the whole market. Test. Amazing. So, one more time. As we all know, last 2 years were really, really brutal for overall market, and DeFi was struggling really bad. I mean, the TVL of DeFi protocols plummeted from, I think, 180 billions to something like 38 billions, which is like nothing. But now it has risen above like 40 billions, and some people do believe it's the first sign of recovery. What do you think about it? Can it be a real sign of recovery or just like dead cat bounce? Who want to start?
All right, I'll start us off. I think it is the start of a recovery. I think there's a lot of like macro indicators that can obviously like point to that as well. I think like the ETF kind of like excitement is definitely bringing people back to the space. And then like obviously from like a infrastructure level, like we've made massive improvements since the last cycle. So I think like the interacting on chain is much more efficient and just better than it was before. And so I think like a number of indicators point to like TVL probably going up. I'm not like a price predictor on a short-term basis, but I can pretty safely predict that long-term we're probably going to be hopefully looking upward. No, not financial advice, but.
I kind of agree. I think it's a good sign of potential recovery, but a lot will depend on how DeFi reacts to that. Do they keep doing things the way as it was done before, or they kind of grow up? So I think we all notice there's a lot of talent in DeFi and like a lot of creativity and innovation, but it's like in sports. If you just have talent but don't build on top of that, it doesn't go far. So here, like the market is noticing, okay, we still have this talent, but I mean, I'm seeing quite a good initiatives in terms of like growing up and really becoming more institutional grade. So if this keeps up and the audience follows the users and the TVL keeps up, we'll reach a great place.
So you join the dark side, but still believe institutional money is very important.
I believe we can find something like a good path in between, like taking the best of TradFi, like some standards, and then putting them with some DeFi style. I'm quite convinced that's the way forward because users want peace of mind.
Okay.
Yeah, I feel like DeFi is a good function of Ethereum prices, and that's for a good reason because I feel like DeFi is a prime brokerage for large ETH holders mostly, which is why the OST ecosystem grew so much, right? So as long as ETH pumps, we're going to see DeFi pump, which is normal. I think the other side of the coin is stable coins. I don't put them in the same category as DeFi, to be fair, because it's mostly Tether and Circle. So that's a little bit of a different thing. On institutional stuff, actually, because before Ethereum was at Lido, and Lido is obviously $20 billion worth. And quite a few institutions already are using staked ETH and other OSTs. So names you would typically not expect are actually quite involved in the space already. Another point is CME futures actually account for 23% of perp volume, which is more than Binance now, which means TradFi is kind of getting involved already through actual data, right? So there you go.
Yeah, I think TVL is necessarily the best metric to measure the success of DeFi, and it's also very much a function of the price of Ethereum mostly. So I mean, it doesn't really tell the story of what's happening in the building infrastructure, key infrastructure for these use cases. That the bear market has been like a bull market in many circumstances, has been a time for constructing new pipeline that didn't exist before. Especially after FTX, we saw like a bunch of interest from institutional allocators that were just curious earlier and then became more like, hey, how do we actually do this thing? How do we go on chain? How do we deploy compliantly? Very much agree with the idea that, you know, we are on the dark side, but we like to see institutions that come on chain and do stuff because that's what ultimately drives the value of the underlying technology and the underlying assets. And so when the technology is used, assets become more valuable, and you know the whole TVL vanity metrics then will go back up.
Thank you.
Actually, I saw 3 bear market and also 3 bull market. And
Survivor.
yeah, and actually it's not the vital, it's the first bear market of crypto, because as it's in the baby steps, when we come to TVL thing, uncertainty of the regulations, uncertainty of ETF, uncertainty of decentralized finance, trust, and also the security measures now is rising, and people are having blockchain mass adoption, by the way, so that when people begin to trust the decentralized finance and also the smart contracts, then I believe that will be the baby step of 36 to $40 billion. Then I believe at the end of 2023, it will be like $50 billion for the global side. And I believe at the end of January, we will rise for the ETF, and people begin to make the whole belief on Bitcoin and also all the cryptocurrencies.
Oh, that's interesting. So you're very optimistic on ETFs. I'm not, but yeah, still makes sense. Okay, what do you think of the current structure of the DeFi landscape? I mean, what has changed in couple years? What new narratives were created, and what narratives are you mostly excited about?
I keep doing that, speaking too loud at first. I think the most like big change, I mean, proof of stake, like, shifting to that fundamentally changes like how trading really works on chain. Like MEV is like a very different category now than it was in the past. And I think the way that like DeFi protocols are now kind of like modifying themselves to actually be MEV optimized is really interesting. There's a lot of teams that are basically looking at the transaction supply chain and seeing it's very extractive. And the big issue here is like LVR, LPs are consistently losing value, which like jeopardizes the AMM model as a whole. And so obviously you've seen like RFQs, like Uniswap X, things like that have emerged to kind of like take AMMs out of the pictures to some degree. But there's also now optimizations happening at the AMM level, which is really interesting. One's like an application level relay network, where it's like basically you can form blocks before they go to actual transaction supply chain, which like foregoes the risk of getting MEV'd. And so like you can return value back to LPs that way. And so I think like to summarize all of this, like DeFi protocols becoming MEV conscious is a huge, huge thing. And I think it can make the whole system way more profitable. And so the teams that are doing that, love them all, because it's a really big thing that I think has gone kind of unnoticed for a bit. So yeah.
I mean, I would say regulatory narrative, but it will bore everyone. So I'd say anything that's ZK related, like all the potential of ZK proofs in terms of like really adding to the narrative of getting like good standards in DeFi, like having best executions that's being proven by ZK proofs, having being able to exclude some tainted wallets thanks to ZK proofs and this kind of stuff. But also account abstractions, just because it becomes so convenient to onboard users. When you think about it, I mean, we mentioned it over the last year.
You know, that's kind of interesting because I was checking the fresh statistic yesterday, and people are not very excited about account abstraction. Devs are. I mean, the Ethereum team is very excited, but not like usual people, not users, because like 5% of Ethereum users or wallet users do use account abstraction.
Well, they don't realize that yet. That's the thing. For a dev, it's exciting, but if you present it to someone, they're like, oh, cool. So they will not get excited about it. But once you start using it and you just realize how smooth things can become, that's when you'll get excited. It's like one of those innovations where just on paper, it's not selling, but then once you start using it, you're like, oh, it's actually quite convenient. So let's say it's not what will get excited like maybe investors and like other people, but for like a user, when I just don't need to think about like all the clicks I'm doing currently sometimes, it will be kind of cool. Yeah. But otherwise, the exciting part is ZK. ZK is becoming like this new buzzword where, I mean, the entire potential behind it is pretty good. Like even from a lawyer perspective, not developer perspective, same. I'm not sure how users perceive that. I'm not sure they actually grasp the potential behind it, but that happens a lot in blockchain. Like people look at what they can earn out of it, not exactly how the infrastructure works most of the time.
Yeah, I guess on the practical level, what's interesting, what I've realized over the last 2 years is that whoever adopts yield that scales with capital tends to win. If you look at Pendle, for example, they've been around for some time, but only after implementing stake teeth, they actually took off. LSTs, I don't have to talk much about that. They grew to $20 billion industry pretty quickly. Whoever really adopts a yield-bearing strategy that can scale with capital tends to win. I think that's just going to keep continuing because that's why restaking is such a big topic now, because people are like, well, we can finally get yield that scales with capital on top of staking, right? So, which is kind of funny because the yield's mostly coming from inflation and MEV. So it's kind of self-referencing whatever's happening on the chain, but people like yield. I guess, yeah. But in terms of what we discussed just before, maybe it makes it more interesting, but I feel like TVO is actually not a bad metric at all, because ultimately it's the capital people willing to commit to the protocol. Like when a large protocol like Lido or a small protocol that I used to kind of do things with, TVO off a layer 2 is always prioritized. Large allocators and LPs are much more comfortable with high TVO project and low TVO project because that's ultimately capital at risk. And if somebody is willing to put $2 billion, it's probably better than a $10 million protocol. So I feel like TVO is actually not a very bad metric. I found it quite like it ultimately guides most conversations in my mind. That's just my opinion, though.
Yeah, Luca, please. You probably have something to add here.
Yeah, no, I mean, I don't disagree, obviously. I mean, this is the Lindy effect of protocols is definitely built on the basis of TPL and how much capital people are willing to put in there. And I'm maybe want to spice it up a little. Like, I'm also excited about the fact that there's many more LST projects coming up, and there's also like potential for redistribution of the highly concentrated LST market on other projects that were not there. I guess like the last year, the conversation was more like Lido versus centralized exchanges, and now it's more like Lido is now, you know, there's
That was my
more
second
projects
question
coming up.
actually here. Don't you think like the liquid staking thing is getting a bit, I don't know, a bit centralized? Because like, no.
Okay, so let's go. So here's what I think. So you look at this pie chart with all the liquid staking tokens and shit, right? And you're looking at Lido, you see 32%. A lot of people know how it works. A lot of people don't. That underneath there's 38 node operators, right? So each gets like 1% of the total market share. They're not the same people, right? It's kind of like an aggregator of sorts. People quote the 33% threshold a lot, like, oh, if Lido takes more than that, it's going to prevent finality. But what happens is, if Lido, for some reason, which it can't actually, but if it did, it prevent transactions from happening, the ETH under Lido would just get burned, so that would kill Lido. And then the network would basically rebound from that. So it would be literally suicidal for Lido to do it, and for all the node operators involved. Now at 66%, you could argue that Lido could potentially like only attest transactions they like, but 66 is really far away. And in the current form, I don't think Lido could get there. It could get there through the roadmap it's implementing perhaps, but that's really far away. The more interesting dynamic is that recently, Hildobi from Dragonfly kind of identified a bunch of wallets. We had 28% unidentified. And he recently found out that actually Coinbase market share is much higher than 8%. It's like 15. That's what we know. They could potentially be even more than that. So it's still the centralized versus Lido game, to be fair. And every other...
The Coinbase case is, yeah, you can explain it easily. Like Coinbase is way more user-friendly, like for usual people than Lido or Rocket Pool or Frax, whatever.
Yeah, it's easy to mint. Obviously, they have a user-based distribution channel for the centralized exchange, which just shows that, like, the reason I believe in Lido a lot is that it's no KYC. It's permissionless, right? They're going to implement community staking, which means you can have like Rocket Pool-like diversity. Coinbase is never going to do that. Binance is never going to do that. So that's why I don't think Lido is such a big risk as people think, you know.
In fact, we were looking for ways to redeem CB ETH on chain, but there's no possibility to do that. Like, you have to go through the CeFi setup. And but I'm excited about the innovation that's coming up, the DVT technology, distributed validation technology. Also happy to see Lido doing, working with Obol and SSV to actually open up on that front. So like the whole innovation is set to distribute more and more. And I think Lido is started with the approach of whitelisting 30+ operators, which are professional operators, but there's also different ways that you can do it, like opening up to more and democratize even further. And I think, like the tendency is to open up further. And I think like a more decentralized, I guess my point is a more decentralized Ethereum is a more valuable Ethereum for all. And I think we all agree, despite, I guess, like some differences in mindset and thinking.
Actually, with the Lido thing, referring to your speech as you are the risk man, actually the insurance and the security options of Lido is better than everyone right now, and Lido is carrying the big heavyweight in Ethereum staking and yielding. Actually, within this, now if the market is now stable and Ethereum is also stable with the TVLs, the biggest opportunity is Lido finance.
Okay. Any other projects or concepts you're excited about? Like, I don't know, decentralized derivatives like perps, futures, whatever.
For decentralized derivatives, If I'm not wrong, 2 months ago, 3 months ago, there has been a fine has been produced for in the United States from FATF. Actually, for the derivative side, there will be some kind of problems with the regulatory issues, and we know that in the case of decentralized markets will be really affected with regulatory things. We all thought that any regulatory options or any law issues cannot touch the decentralized things, but we saw that it could be fined. And we have to be really careful because of the countries are really attacking like wild animals. The government doesn't like anytime decentralized finance and also crypto or blockchain anytime. Because of this, there will be some CBDS will be launched on governmental side. And I'm sure that with the regulations, with the ETF, and with all mass adoption, will issue everything on the folk side, actually. Europe has started within this, and as United States will come, and I'm sure that Japan, Singapore, Switzerland, and also Estonia is the leading countries that having the decentralized finance and also doing the blockchain business very well.
I can jump on that. I mean, you mentioned regulations, Switzerland, and decentralization in one sentence. That's all I needed. Like, I was a Swiss lawyer before, so I definitely agree that for DeFi, it's great. But what I'm excited about is like having a clear line between decentralized and centralized, because for now, like a lot of projects, this is why the regulators are a nightmare. They have no clue what is actually decentralized, and even for users, you turn out like you just discover afterwards, oh, actually there are centralization points. This is like one of like the question about Lido. Is it like really decentralized? We keep asking that question about projects. It's like, oh, it's DeFi, but to what extent is it? So having clearer standards for that, and regulators are kind of pushing at it, because in Europe, when they say we want it fully decentralized, when they finally specify what it means, it may really set the bar high, and a lot of projects will either have the choice of like really using all the tools we have now to decentralize even more the infrastructure, governance, and so on, which is exciting because that's a great narrative to a certain extent, or to really just acknowledge, okay, we actually don't want to be that decentralized, and then we'll have like this other side of DeFi where you may have some aspects being decentralized or not. But I'm quite excited about seeing how the projects that want to be like fully decentralized and fully like give to the community all the power to decide how they will evolve and how they will implement that actually.
I think one comment that I'll make on the decentralization point is, in my opinion, Lido is not really a centralization risk. The biggest one is block building. There's a single block builder that basically takes 90% of the profits from the transaction supply chain Ethereum, and every single profitable block, they win. And so if one party has undue influence over Ethereum, it's not a validator, it is a block builder, and they're called Beaver Build. You can look it up, it's public information. And so I think Lido gets all of like the hate, and it's misplaced. It should be one level below, because that one level is a lot more profitable and it has a lot more power than Lido does.
Actually, with the Shanghai update of Ethereum, in the first year of the yield, I have written an article about it. What will happen to Lido finance? If we talk on the rule book or on the board, yes, there will be an Ethereum hype after staking opens, and also Lido finance hype. Can you imagine? And I'm sure that Maker and Lido owner is the same. You may see it's like an equalizer, in our young times. When Maker goes and Lido falls, and Lido hype and Maker falls. This could be like that. Actually, I'm trusting on Lido because they are carrying very well the Ethereum staking options and yield options. Actually, Coinbase running in the second phase, but for the decentralized side, I'm on the Lido side.
I'm gonna stop speaking about Lido, because I think like there's so much more than Lido when you speak about DeFi. I'm gonna mention a few things that I'm excited about. I was in Frankfurt in a traditional finance conference where people wear suits instead of like hoodies and hats, and those people are really excited about tokenization of real world assets. And I think This is a big trend, has already been a big trend in 2023, and it's going to be even bigger in the next few years. It's quite incredible to me to think that settlement of securities takes 2 days, what they call T+2, and now they can do it in 0 days atomically in DeFi or with using blockchain. So that's something they get excited about, and we definitely want to support that kind of use case. And yeah, so this is, and I think like also having more traditional finance players integrating native on-chain solutions, because I think like, it's good to see some of them can still be the last mile access for users, especially if they integrate the underlying technology. And so, in the future, we might see things like, on-chain bank accounts, parallel bank accounts on-chain. And,
do you know the DeFi mallet concept?
The what?
DeFi mallet. It's like fintech in the front and DeFi in the back. So
there you go. Yeah, exactly. So
mallet is because of ugly haircut.
Yeah. So I mean, it's not unthinkable that you have a bank account that has there's an on-chain vault which with off the balance sheet of the bank. So it's you and also like sort of a self-custodial setup possibly, and then like the step further would be that you use on-chain assets to take out like maybe a fiat loan instead of a crypto loan. So then like you really assign a monetary premium to the crypto asset that you hold at the bank, and they are maybe used in replacement of like real estate as a sort of mortgage kind of security. So I think that's those things are going to come sooner rather than later, and we're actually already working on some of these things, and not there yet, but because it takes time to get people comfortable, especially people that don't understand the language of DeFi. But things are kind of like in the works.
But there's some progress with like those people not understanding the language. Like each year I'm teaching actually DeFi to bankers and like people in the compliance department. Last year, still like most of them, maybe 2 people out of 15 understood what exactly is DeFi. And this year, they actually do now understand what is DeFi. Like you don't need to teach everything from the beginning, and real world assets help for that. But like really getting those people to understand how it works, seeing the potential, this is something we should be excited about. They start to speak the same language as we do in DeFi, which is amazing.
Actually, it's still a problem because you're talking about like finance bubble, because before it was a crypto bubble, so only like the guys from tech or devs or Degans were like crazy excited about it. Now it's like Wall Street guys and just regular finance people, but actually we need more. So my last question is, what are we lacking at the moment to gain more user traction? Because like it can be a lagging UX. We all know that's like a huge problem in DeFi space. It can be like the complexity of the product. So yeah, what do we need to have, and how much time it will take to gain more users?
We need a bull market. That's it. It's pretty obvious. Because UX is bad, but once the Dogecoin starts pumping, people are going to figure it out. You know what I mean? Like when you really need to buy something, you figure out. So UX is obviously an issue, but I feel like we're looking at treasury rates at like 5%. They seem attractive, and staking is like 3 or 4%. But that could flip, and once that flips, you just have this huge kind of inflow into staking. If you put it into staking, you've got perp futures as well, which is a decent trade as well. Actually, that kind of makes me a little bit more bearish on real-world assets than they used to be, because if we're expecting a bull market now, we're kind of assuming interest rates will go down. So it's hard to see how tokenized treasuries can keep growing at this pace. And instead, it's probably going to be replaced by something like based on staking, per basis, etc. So I'm excited about yield. That's what we need. We need yield that can scale.
Don't
I
fight,
think,
please.
I think on the yield topic, like a huge innovation, like on staking yield at least, because right now staking yield on Ethereum lags actually treasuries. It's EigenLayer. Like EigenLayer is going to unlock a massive design space for around e-staking, to where it's now going to be way more enticing to stake your ETH. And I think like the biggest like way to actually like probably reduce Lido's influence is EigenLayer. If we're going to like talk about that, I think like liquid restaking tokens are going to be a very, very common thing, but they're fundamentally different than LSTs. They're probably going to look more like indices, because there's a lot of different AVSs that will have different yields and different tokens. And so now it's like not saying crypto securities, but like kind of like ETFs, where it's like you have like different like compositions of these ETFs, and you have users like choosing which ones they want, and like you probably have different providers actually giving out that yield. And so I think that's going to unlock a ton of interest in ETH staking, and as long as it's done in a safe way, which like obviously is the big risk here, it's going to be super healthy for the Ethereum network because all the underlying stakes going to be just there, and then everyone's going to be using like derivative tokens on top. And so it's, for my opinion, the next like big step for Ethereum and Ethereum staking specifically.
Let's say bull market, more of this kind of projects and explaining them in plain terms, because it's quite sad when you hear like, oh, we only recommend Ethereum and Bitcoin and holding it because we can't like dive deeper into how it works and we can't assess the risk. So once we have like more organizational clarity and like really entities and not just like those projects that float, which are great, but can't really interact with an institution that wants to use them, it will be unlocking everything. Because if we have excitement, but then you have this wall of, sorry, it doesn't meet our compliance requirements, it doesn't work. It's great. You have hype around something you can't touch. So whatever happens with staking, how you generate yield and so on, being able to explain where it comes from and something that's understandable to someone outside of the crypto sphere, this is what will unlock things. Because for as long as it remains this weird monster that's attractive, but we can't really interact with it unless you're ready to go high risk, it's quite of a pity.
You mentioned the DeFi wallet, and I think that's in our experience right now, we're integrating with wallets from different CeFi players that now are opening up to like self-custody and their user. I mean, they want to have a curated experience through their platform, but it's fundamentally in a different paradigm compared to the past, opening up to DeFi. So I think that's something that will drive a lot of adoption because the fintech UX part is going to be always probably the prevalent gateway, but then like it's fundamentally DeFi. So I think that's very exciting to see, and we're seeing more and more. That's good. I like to see that.
I think last words mine.
We're totally out of the time.
Thank you very much. Last one or two sentences and I will finish. Mass adoption, user-friendly usage of DeFi. It's also important because our fathers and mothers cannot use the mobile banking 2 years ago. And then after 2 years later, they are using the mobile banking application, and they are now using like a pro. And I'm sure that in 2 or 5 years, it will be very easy to the DeFi product. Yielding also, holding us yielding. They will not make their money to bank to get any interest, but actually DeFi is the most proper solution for our money. Thank you very much.
Thank you. It was very insightful, and thank you for being here, guys. Enjoy the rest of the day.